Hey everybody, it's Jim McMahon, President and Partner of Benchmark Mortgage. My partner Stuart. We just wanted to spend a few minutes with you today and just give you perspective from our vantage point in the mortgage banking industry on how we're handling the coronavirus situation and how we can serve you better and continue to just make a difference that lasts even through this very challenging time for our country and our communities.
Yeah, and I'm Stuart Hunter, founding partner of Benchmark Mortgage. We're 21 years this year. So yeah, there's this question that's out there of, is today worse than it was in 2008? And let me just tell you, I managed a mortgage company right through 2008, and I would tell you, I think it's worse. There's a lot of good things that I could check off that were not that were on our radar back then that are not today. I'll give you a quick example. Right back then I was worried about the liquidity. Like, was the liquidity going to stay in the market? Meaning, were we going to be able to keep our warehouse lines? Most importantly, were we be able to keep funding loans? And then the last one was that the integrity of the borrower that we were dealing with as far as buybacks and stuff. Today I can tell you, we're in a refinance boom because of where rates went. We've raised our warehouse lines and we are funding loans like crazy right now. Now, that said, let me tell you where I go. Well, it's a little bit different. In fact, maybe it's worse, right? And it's what you can't predict right now, and it's what you don't control. Leadership really got us through 2008. Great decisions. We're stronger financially than we've ever been. Our teams are stronger from a standpoint of their lanes and their ability to be able to make decisions. So that's off the table. And, really, I would more put it on, it's just now, does our country shut down? That would be one of, we don't control that. So let's talk through that and talk through, where we are with technology, where we are with capacity, and where we are with certainty. Go ahead.
So let's start with capacity, just from the standpoint of being, as a consumer and as a realtor, builder partner, someone who's referring loans to Benchmark and one of our Benchmark professionals. Our industry, just from a coronavirus aside, rates dropped, and let's just talk about business right now. In the mortgage industry nationally, there's about $11.5 to $12 trillion in mortgages on the books. Your mortgage, my mortgage, our house payments that we make every month. And we've all helped put that together over the years. Well, what's fascinating right now from a capacity standpoint, to what Stuart's point, is because of the wild swings in rates and the huge precipitous drop in rates in our country over the last 2 to 3 weeks, really since March 2nd, and because of the coronavirus spreading and kind of the fear and panic that moved literally trillions of dollars to our U.S. Treasury market and in and out of mortgage-backed securities, about $2 to $4 trillion right now. I've seen all kinds of numbers all over the board of mortgages in this country are in line to try to get refinanced. There are major institutions that are posting right now it'll take 180 days to refinance your loan. And my point on that is just the capacity issue in our industry is it's like a crowded highway or a logjam on every highway in America at the same moment. We've made very good choices about that. Our locked pipeline right now is as big as it's ever been, but we still have a tremendous amount of capacity. We have way more purchases than refinances. We are doing refinances for our past clients, which are many of you. And we have a lot of them right now, but we have capacity. We were fortunate enough to have hired 7 new team members in the first month of the year, underwriters, totally looking to have more capacity this year. We've always kind of taken a mindset that we want to actually have capacity in anticipation of quality demand, and that's paying for us right now very, very well from a leadership standpoint, like Stuart said, with good decisions. And so that's one of our biggest messages. Yeah. We have capacity right now to serve you well. And let's talk about technology.
Yeah. So, technology, I would tell you, we are a core values-based company, and relationship is really our number one core value. So, we've always been that company that wants to meet face-to-face, that wants to have that conversation in person. Today, obviously, we're not doing that. Now, we've always done the digital mortgage. In fact, we can originate a loan from start to finish without ever having any interaction, all through a digital flow, right? Being from the origination standpoint to not requiring wet signatures, the disclosing, our processing, underwriting, closing, funding, you name it. In fact, we're doing it today where we've always had this, ability, because we work in 43 different states, so we've always had that logistical scenario that I'm describing to you. But yet, at home office, a week ago we sent 200 people home, and so it's not it's not that we don't have the technology, it's just to work through the, call it the moment of impact of going ahead and sending 200 extra people home. Now, I can tell you that, I am absolutely blown away with how well that went. I think we were braced for a little bit that could be a little bit shaky, and it wasn't. We're funding loans like crazy, and we're still originating loans, and everybody is functioning really nicely. So I like that. Now let's talk about digitally some of the stuff that we're faced with right now that I'm looking at. Okay, one. From a capacity standpoint, we're watching our title companies. Some of our title companies have the ability to do what's called e-closings. We do, but some of them don't. Okay, well, we have to keep an eye on that right now. If our country does go into a scenario where it potentially would shut down or what that is considered non-essential, we have to have a plan around that, So far, we've been able to work around just about every scenario that's been thrown at us. What you would not be able to work around, right, is you couldn't get a loan closed. That would be one. Yep. The other one that we're looking at right now is actually courthouses from not being able to get our deeds of trust filed. Believe it or not, we have literally had some courthouses that they were not open and you could not file a deed of trust. So again, we saw a little bit of traffic today. We're in the great state of Texas, and with that, they called that essential. And so with that, they said, hey, look, no, we're going to keep our courthouses open, and we're going to keep the ability to file important documents like that. So that's good. But that goes into that 60-day lock scenario that I want to bring up.
And before we go to locks and rate, which are important, one thing I want to just say, because our valued partners are watching this, from builders, realtors, referral partners all over the country, very important what Stuart just said. For any transactions you have right now, you want to make sure and you look at the e-commerce and digital trail or the possibility e-commerce trail of anything you've got in the pipeline right now to close. Does your lender, which of course we do, have a great online application system that works from start to finish? An artificial intelligence AI process, which we do. All those things, e-disclosures, which we do. The e-commerce, probably the biggest thing that's going to come out of this crisis is more and more e-commerce and just the certainty of that. And we were very far ahead of the curve on that for years.
Well, we've been paperless for over a decade. Yeah. But kind of going back in the sense of, let's talk about appraisals for a minute. So, again, we have our eye on that. There are 2 states that we work in right now that literally has come out and said that is non-essential, and so appraisers cannot go into someone's home, right? Okay, so one of the workarounds is that let's go get appraisal exemptions, and we are getting a lot of those right now, but there are certain products that you can't get those on, so we're paying attention to that. But that kind of goes into, where we're seeing it in one area, could that drift into another area? And so I definitely want to kind of propose, right, one of the things that we're looking at is that the extra bandwidth that you can get on a lock today, instead of going that 30, going to that 60, just for some insurance on just some maybe unknowns right now. Again, we're clipping away, and I'm not worried about us. What I'm worried about is more of the marketplace right now.
And the time of the transaction. And so let's talk about that for a moment. We've all owned homes. Hopefully, watching this video, we're in the real estate industry, but we help people own homes. And yes, rate is a key component of that, but I'm going to actually tell you right now, you're going to get the best rate we can possibly give, but rate is not the main thing to pay attention to from the standpoint of, and this is, listen to me carefully, 34 years of doing this as a professional mortgage lender and banker, and have done thousands of transactions. And I'm telling you, I've never seen 2 things. Number one, the Federal Reserve has cut the Fed funds rate twice in less than 15 days. That's never happened before, ever. Look it up. And then the other thing is that they've cut it to 0. Now that's happened before. But here's a factoid that you may want to write down and help with your clients. It's a very powerful truth in a script. The Federal Reserve cut the Fed funds rate to 0 to 1/4. It trades in a range now on this past Sunday, this past week, as you may know. The last time they cut it to 0 to 1/4 was just back in 2010, and it stayed there for 7 full years until 2017. Mortgage rates during that 7 years, while the Fed funds rate was at 0, were as low as 3 1/4 and as high as 5 1/2. And that's a very important thing for you to understand as real estate professionals. What the Fed did in cutting does not equal what mortgage rates are going to do. They trade completely different. Over time on a graph, they go in the same direction. But very, very important here, when the Fed cuts that drastically, that is the biggest thing, is for cheapening overnight loans between giant money center banks, for lowering impact on credit card loans that were 18, maybe they go to 15, prime-based loans. It does not affect mortgage rates directly at all in mortgage-backed securities. In fact, even today, Stuart, we were talking to our leadership team a while ago. We've gone from this morning improving in rates by 1/8 or so to we've worsened by 3/8 of a rate this afternoon. So think about it, that's a 0.5 point move in one day.
So let's go into certainty, because really what it's about is that certainty, as in, can I get my deal closed? I mean, that's probably the $1 million question, right? And what I would tell you is that Benchmark is certainty. And if we say it's approved, it's 100%. I'll say it again. If we say the loan's approved, it's 100%. And if we say we're going to close that loan, come hell or high water, we're going to get the loan closed. Now, the thing that we want to be and pay serious attention to right now is that in this market it's just having a little bit of patience from what you don't control. And I know you agree with me. I mean, I was on the phone with 3 very, very sizable builders before we did this. And my question to them simply is that, hey, are you seeing any business interruption right now? So far so good, but the consumer buying behavior potentially does change. The ability to, if we go into the shutdown, right, that is something that I think that, again, we're talking about. How do we handle a pipeline that goes into it? I'd much rather handle that pipeline on a 60-day window than I would in a 30-day window, and then we'll renegotiating out on that 60 days. So, I think that the part that I would like to, kind of just share is this in closing, is that for our builders, our realtors, our clients, we are certainty. We are absolutely the strongest that we've ever been as an organization, but we want to see our teams get their stuff closed in a way that is most whole for them, right? So just kind of close with that.
Well, and the other thing I would say too, and one of the things I think we should be most proud of in the team that we are with realtors, builders, and referral partners in our Benchmark team, we represent 40 to 42% of this great economy in this country. And so I can tell you our president and leadership wants this part of this community to keep going, because we have to, and we will, even if there's a temporary shutdown. I think the biggest thing that we're trying to get across today, and being really transparent, is that our clients need us, the community needs us, the overall just country needs the real estate profession to be strong and to have great information and great education and leadership in our transactions that we're trying to get during this difficult time. So that's what we wanted to do today. Hopefully that makes sense, and we'll continue to bring this information more in the near future.
Thanks for supporting Benchmark.
Thank you.